Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Following yesterday's blockbuster US CPI event, today's economic calendar does not disappoint, with the Great British Pound inflation year-on-year being released at 9 a.m. South African Standard Time, with inflation set to ease a little bit within the UK. This afternoon at 3:30, we can also see that the US retail sales as well as the core retail sales report will be released at 3:30 South African Standard Time, definitely creating some fantastic trading opportunities for us today.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar hit a 6-week high against the yen and recovered from a roughly 2-week low against a basket of major currencies, as data from January shows the smallest annual increase in US consumer prices since October 2001. Did not alter market expectations that interest rates will remain elevated for some time. The CPI year-on-year grew 6.4%, the smallest gain in about 18 months. Although January's annual CPI rate was higher than the forecasted 6.2%. Inflation in the US is clearly still sticky. This will keep the Fed policy on track, keeping the US dollar strong, not necessarily stronger. The big picture is that inflation data clearly shows that the market is too optimistic about inflation dropping enough this year to allow the Fed to start cutting rates. Now let's move over and see what's making headlines on Wall Street. Stocks ended mixed after US consumer price data from January offered little to change expectations about the Federal Reserve's path forward on interest rate hikes. Of the 11 S&P 500 sectors, 7 declined, led by real estate down 1.08%, followed by 0.95% loss in consumer staples. Money market traders are betting on at least 2 more 25 basis point rate hikes this year, with interest rates peaking at 5.28% by July. Now let's head over to commodities. Oil prices slipped in early Asian trade this morning after falling by more than $1 a barrel in the previous session, as industry data pointed to a much bigger than expected surge in US crude inventories. US crude inventories rose by about 10.5 million barrels in the week ending February 10th, according to market sources citing American Petroleum Institute figures. The build was much larger than the 1.2 million barrel rise that analysts had expected, potentially pointing to a drop in fuel demand. Gold prices steadied near a 1-month low after data showed annualized US consumer inflation fell less than expected in January. Traders are now watching to see how the Federal Reserve will react to this data, given that the central bank has maintained a largely hawkish stance against inflation. And finally, let's finish things off with cryptocurrencies. The flagship cryptocurrency Bitcoin is now entering its 7th bull cycle, according to the head of a $4.1 billion cryptocurrency hedge fund, Pantera Capital. Dan Moorhead predicts this year will be one where trust in the space is rebuilt. He is a former Goldman Sachs bond trader who created the fund back in 2013.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.